I warned you on Thursday that my signals were suggesting we are going to get a bigger pullback. That has now been proven correct. I warned you back on Monday at the top, the previous Friday, near the top there, that we are going to get a pullback. The 60-minute extremes were telling us that. That was correct. Just as the extremes were warning, we are going to get the presidential election rally, again with the extremes and the bullish diversions. The 60-minute chart has given us some great signals. Bigger pullback is now happening. After Fed Chair Powell says that there's no hurry to cut interest rates. I addressed this in my last video. Again, just like Powell and the Fed was telling us there was no hurry to raise rates because of inflation, because it was transitory. Again, they were blindsided by the inflation. Now they're blindsided by their coming recession. Continues to make monetary policy mistakes over and over again. I addressed all of this in my last video. You might want to watch that video. Again, I show proof that a recession is getting ready to start. You see continued weakness in the labor market, and we've triggered the Psalm rule, going to have a recession. The S&P was down 1.32%. It was down over 1.5% at the lows. It was down 78.5 points to 5870. 5870, back below 5,900, off of the 6,000 area. The NASDAQ was down 2.25%. Russell was down nearly 1.5%. And the VIX was up over 12%, 12.79% to 16, but being up 12.79%, you know what that means. In the next two trading sessions, the VIX is predicting that there's an 85% chance that the S&P will get a bounce or a bottom. We may go a whole lot lower before that happens. It's predicting that in the next 2 days, next two sessions, Monday or Tuesday, have an update. That doesn't mean bottom's necessarily in, although it could for the short term. It does mean VIX is predicting an update for the S&P 500 either Monday or Tuesday. 85% chance it happens, 15% chance it fails. I'm basing that on the historical closes, moves greater than 10% on the VIX. Gotten a lot of important earnings so far. We're still in earnings season, but the big one next week is going to be NVIDIA, and NVIDIA is going to be after the bell on Wednesday. I think in my last update I said after the bell on Thursday. I misspoke on that. It is after the bell on Wednesday, so that's going to be really, really important. Watching, do we rebound with NVIDIA earnings, recovery, or market end up selling off further? We'll be watching to see of the NVIDIA earnings on the NASDAQ and the S&P 500. After the bell on Wednesday, the VIX got a bump with a close back above the 200, but stalling at the 10 period. The 50 is still above the 200. This is problematic going forward for a bullish case. Tightening of the bands are telling us something's coming down the pike, but it may not be done yet. Gapped higher in the VIX, we gapped lower on the S&P. We'll be watching those gaps. This is predicting an update for either Monday or Tuesday. It's predicting a bounce or a bottom. VIX stochastic turning up, but the MACD is still negative. We'll be watching the VIX closely going into next week with NVIDIA earnings. NASDAQ got a bearish reversal of conditions. So far, the momentum line still hasn't turned bearish, but it take out the trending cloud. And we are getting some bearish, more bearish signals. Again, we can form a divergence or confirmation of a lower high if we go back to fill the gap at some point. Watching to see if we try to do that next week or not. Earlier in the week, NASDAQ got the T up here. Testing short-term momentum was turning down. Again, I warned you on Monday, get a pullback. This showed up Thursday earlier for NASDAQ as we just saw. But again, momentum line still hanging in there. Got the arrow, got the sell signal here with the breaking of the cloud. I urge you to be watching momentum for a divergence. We'll try to reach our objective target in the monthly time frame. Intraday momentum signals, along with the awesome oscillator in the daily time frame, turned bearish on Thursday. Trending signals turning bearish here on intraday charts on Friday. Warning I gave you on Thursday was correct of a bigger pullback. The warning I gave you on the previous Friday and last Monday, get a pullback, was correct. just as I warned you, we would get a rally ahead of the presidential election, and the Fed continue to do a very good job. Again, the momentum line turned bearish on Thursday. The trending signals intraday turned bearish on a Friday. Again, if it's going to be short-lived, we could still test resistance in the monthly time frame. I'll be watching the gap down here where a gap support could still form a divergence, a larger divergence here intraday. Your divergences have marked pullbacks since July over here. Signals were correct again. Correct about the rally. I was correct about the peak. I was correct about the pullback, and signals warning of a larger pullback. So the signals continue to do an excellent job. Please support the channel with the link directly below. That allows me to be able to provide you this information. A link, it'll take you to a secured site. You can donate any amount you want. I don't have any sponsors, just a direct relationship with you. I need to hear from you in order to make it work. If you like the charts, if you like the indicators, let me know that by supporting the channel. If you could take a moment to step up to the plate and help out, I would really, really appreciate it. I thank you for your consideration for that. Now, on Friday, we had a gap and go on the intraday charts. We gapped lower and we kept going. I warned you that my signals on Thursday, we are going to get a bigger pullback. Don't reach that monthly trend line. It could be a reversal. Likely going to go back and fill these gaps. Could go lower. Again, we're getting a bullish divergence here on the 5-minute chart, but it's only, short-term price fluctuations. Could just be a bounce that we got towards the end of the session. Still may back further before we get a rebound, but I'll be watching these gaps. This is at the 5950 area, this gap fill on the S&P 500, but a beautiful gap and go pattern here in the 5-minute time frame. That's what happened on Friday. I told you on Wednesday, hitting the 50 above the 200, but price ended up closing back below it. I told you again, it's going to get a mild pullback. We got to get above this 200 in the 5-minute time frame and keep the 50 above it. 50 dropped right back below it, and again we got further selling pressure there on Thursday, which again that my signals warning me that we're going to get a bigger sell-off, but dropping below the 200, back below the 50, dropping back below it, and again then the reversing off of this trend line with this rally and leading to the gap there Friday. A good rule of thumb on the intraday chart, the 5-minute chart, you're below the 200, you're going sideways or down. When you're above the 200, you're going up or sideways. Good tool, the 50 and the 200 period on the 5-minute chart. The gap and go on the 5-minute chart has taken the 60-minute chart down to the 200 period, down to gap support right here, which again I talked about on Thursday and on Wednesday. All these levels. Gap support up here, the gap fill, the gap support here, and the gap fill down here. SPX closing in on that gap fill. S&P's up here near gap support in our 200 period. We could still overthrow this level, becoming oversold. Again, over here, we became oversold. We formed the divergence. I told you we were going to likely see a presidential rally and a rally election that could continue on with the Fed, reverse with the Fed, one or the other. We got the presidential rally and the Fed rally, which I told you both could end up happening. We got that. Then we moved to extremes. We got this negative divergence at extremes there on Friday and Monday, and I told you to be watching for a pullback, predicted a pullback. I was correct. And then Thursday, I told you that we were going to get a deeper pullback because my signals were warning of that. That was correct. So signals warning of the bullish breakout of the triangle over here, that was correct. The divergence here about the pullback, that was correct. I told you we could just have gotten a triangle and saw the surge up here. We broke down first, got a fake out, and then got the surge. I told you we were likely going to get that rally ahead of the election. We did. We were going to get a pullback. We reached extremes, and I told you we've likely peaked and we're going to pull back. We did. Looking for clues for topping process, and again, still go a little bit above this level. If we can go back and fill the gap and we get a gap and trap where we go down and we start moving in the other direction like we did over here, but start seeing evidence in the weekly time frame that a top is in, then again it's possible we've reached my objective target range and tag the trend line in the monthly time frame. Still may do that. My guess is we will, but I'm open-minded because we don't have to reach that trend line. We could just come shy of it. I'm keeping all options on the table for the topping process, But just because I think something is going to happen, a trend line is going to be tagged, doesn't mean it has to be tagged. Reach my target level, again, into the target, the 6,000 area, we're there, likely around that 6,040 area. We came to just under it, that mid 6,000 area. We overthrow the trend line, we could go as high as the 6,100 range, the low to mid to high 6,100 area. Looking for clues. We have a blow off top. We could see a topping tail before the month ends in November. That is certainly possible. I think we'd likely top in 2024, whether that's November or December. We'll be looking for clues. Right now I'm treating this as a pullback until proven otherwise, but we are at the gap point from the presidential election results here, gapping higher. We approach the 200 period here. We're trying to bounce off of it. We're down at extremes here. Divergences may develop, or we just may reach an extreme and rebound. MACD is still bearish and in negative territory, so we'll be watching what happens here. You still have the 50 above the 200 here. They're pretty far apart. If we try to find a bottom here around gap support or the 200 or just under these levels, so that, again, the gap fill over here, and again, we'll be looking at the gap fill up here, near the 5950 area. And just zooming out on the S&P 500, again, major support is right here at the 5670 area. We're at our 200 period, the gap fill down here in the 5700s. Here at this low, again, ahead of the presidential election, we had this bullish divergence. Over here at this low, we just, with the sell-off with the jobs report, we came down here, we filled this gap, and we just reached an extreme. There wasn't a divergence with another low. We got actually a higher low with the next pullback on the RSI there. And which is this, we'll be watching. And again, if we go back up, do we end up forming a larger divergence here on the RSI? Could depend on the NVIDIA earnings. What happens ahead of the NVIDIA earnings? What happens Monday, Tuesday, and Wednesday? After the bell on Wednesday with the NVIDIA earnings. So again, we'll be looking what happens ahead of it and what happens with the earnings. And just quickly, we're testing gap support here from the presidential election results gap higher. And then we have the 20 period moving average there. I've drawn a trend line from this low at the 50 period to this low right here. Another point of interest, and our gap fill is down here. So again, we'll be looking at these levels closely going into next week. About back over here at the peak again, pullback, and then on Thursday I told you we were going to get a deeper pullback because the signals warned that was going to happen. That was correct. Below the 10, but we're bouncing off the 20. NASDAQ is below both the 10 and 20. So again, I'll be watching. Do we end up setting up a divergence here on the RSI? Reach that trend line in the monthly time frame. MACD has not rolled over. There is a possible divergence here already. RSI moves slightly higher, so again, there is no divergence with that previous peak. One may develop here. I warned you about a bigger pullback on Thursday because, again, we got the awesome oscillator bar turning red, and we got momentum signals on the intraday charts turning bearish. That flipped the bar to red here when it played out the very next day, getting another red bar. Again, we've moved slightly above this peak. We could form a brand new divergence. The awesome oscillator on the MACD and on. The MACD still has a divergence in play, but the RSI clearly has moved higher. The S&P daily chart along with the awesome oscillator. Be bearish as if red bars just started going into the negative region. What would be bullish is if a divergence began to develop here. And we still reached the high end of the target there, mid 6,000 area, or even overthrow the trend line in the monthly time frame going into 6,100. Bars turn back to green, up the 10-week moving average and support ahead of the presidential election. I talked about the 10-week moving average here. I talked about the 50-day moving average on the daily chart. Again, we still have a divergence in play. It's a triple divergence in play. We'll be looking for red bars going forward. You've got the same divergence going on here with the MACD, triple divergence. Strongest reversal signal in technical analysis, because it doesn't play out immediately, or maybe it's starting to play out. Maybe we don't reach my target levels. That's possible. I still think that we can. I see evidence that the top is in. We're in a topping process. Still likely going to reach my target levels unless those weekly divergences begin to start playing out. We'll be watching for clues. To have a bullish reversal of conditions here in the weekly time frame after August sell-off, which again, about that bottom at the time, we'd rally with the inflation data. We've been bullish here in the weekly time frame ever since. We're looking to see if these divergences begin to play out here on the Awesome Oscillator and the MACD. Stochastics rolled over, but it's still above 80 here in the weekly time frame. The S&P has moved into my target range, the upper end of my target range. We moved above 6,000, but we haven't tagged the trend line. We still may do that. Guesses we will, but again, I talked about the weekly chart here overthrowing this trend line right here, coming up to it or overthrowing it surrounding the presidential election. That did happen. We can move to new highs. We overthrow the backtest trend lines of those rising wedges, which ended up happening. I told you to be watching this trend line, and because we got above it, I told you to be watching this trend line from these highs over here, which is perfectly parallel to these lows over here. So again, we're watching this. We're forming possibly a larger rising wedge. This upper boundary of the wedge intersects with the blue line, so we still may attempt to reach that level, all said and done. The divergences are in play here, though. Again, have to reach the monthly trend line. We very well could. My guess is we will, but I'm open-minded. Again, we start seeing a reversal start, then that's all she wrote. Again, I am looking for a top, but I'm open-minded. I'm flexible. Looking at that target range, that upper end of the target range, I said we may even overthrow it and go towards 6,100. But we'll be watching. Do we sell off with NVIDIA and start a major reversal, or do we rally with NVIDIA? But these divergences are going to play out. Maybe they're starting to play out right now. We had a rally the previous week, up 4.66%. NASDAQ was up over 5%, and S&P was up 4.66%. Up 266 points. We gave back just under half that at 2.08%. We were down 124, almost 125 points rounding up. So again, I'll be watching to see what happens. Got a trend line here to be paying attention to now from the low after the July sell-off connected to our recent low here. We'll be watching these levels. Now, are the divergences done? Buy a little bit more time and maybe reach the blue line, the upper end of the channel, which again I think is still very possible. If we do reach the upper end of the channel, again that could push us into the 6,100 area, and we could tag that upper boundary in the monthly time frame. A few other divergences are present, not just with the MACD and the RSI. It's all over the place in the weekly time frame. So market takes its time doing what it's going to do, then people can place it and don't think the divergences will or play out. Topping process. It's not just the RSI and the MACD. Again, here, momentum. We have triple negative divergence. It's now starting to roll over. Again, can we reach that upper boundary, or is that all she wrote? Same thing here. We completed a little divergence right here with this rally back up with the presidential election results. Again, a triple divergence here in the weekly time frame. So it's all over the place. It's going to play out. The question is it done, or do we go a little higher and slam into that trend line here in the weekly time frame and also into that monthly trend line right around the 6,040 or mid 6,000 area? Overthrow it again, the 6,100 range. That's where I think we're going to peak here. Weekly signals start turning. Maybe it's close but no cigar, but my guess is we'll still reach it. But again, let me repeat, I remain extremely open-minded. I'm looking for a topping process to play out in different ways. Tell you what I think, hey, I still think we'll reach that level, but just because I think that doesn't mean it's going to happen. Start seeing the market reverse. We have a large divergence here on the NAAIM exposure index showing what active money managers are doing. And the extremes or the divergences at extremes from tops and bottoms. Bullish sentiment is through the roof. The AAII sentiment survey is at 49.8. The extreme readings in the high 40s or on into the 50s is where you tend to see peaks, showing total complacency. Only 28.3% bearish. Election, everybody believes we're now going to have this economic boom, avoid a recession, and the stock market continue a brand new bull market from the 2022 low, which again, the bull market never ended. Again, complacency levels with sentiment. And then just quickly in the monthly time frame, again, I'm looking for a turn off of this black trend line right here, which directly underneath. The red trend line excludes the shadow in 2000. The black trend line includes it. I believe we're getting a blow off top here in the monthly time frame where we're just getting this massive push up here. I'm looking for a potential reversal bar in the monthly time frame. And again, if we peaked, we could see it by the end of the month, a topping tail. If we could rally back up, again, we're just directly under that trend line. Again, upper end of my target level, the 6,000 area, again, coming in right around the 6,000, the mid 6,000 area, 6,040 or so. We were just shy of it. Maybe that's all she wrote. Close but no cigar, but I still think you got a shot of reaching that level. Like I said, I remain open-minded. It's going to do what it wants to do, and it's not going to do what I insist that it does. It's going to do what it wants. Job to pay attention, support and resistance levels. You could see the trend line. We're just shy of it. Like I said, I think we have a blow-off top on our hands, and I think it will stall in this area. And if we overthrow the trend line, we end up doing that again. We could go into the 6,100 range. This is where I'm looking for a top. We're seeing evidence that that's in, maybe no, close but no cigar, but still think we got a good shot of reaching that level. We'll see if we sell off with NVIDIA earnings or rally with them. NVIDIA sells off further next week. We have the possibility of a double top. Again, testing the 20-period moving average. NASDAQ moved to just beyond it. S&P's testing the 20-period. We gapped lower. We were down by 3.25% with NVIDIA there on Friday. At this multiple point divergence here and a simple divergence on the MACD. If NVIDIA can do what Bitcoin did and move higher above this area decisively, then be forming a double top, then you get something else, but there is still a possibility of a double top here going into earnings. So we'll be watching what happens with the gaps lower on Friday. Do we have a gap and go? Do we have a gap and fill? Do we have a gap and trap? NVIDIA and the market. So just want to be watching these divergences very closely here on the RSI and down here on the MACD as the stochastics tipping down below 80. So again, could get a bigger pullback as my signal suggested last Thursday, but then maybe try to rally with earnings. I can fill the gaps where, again, maybe go higher. We'll be watching what NVIDIA does. Does it do what Bitcoin did and go surging up above this area, or does it form a double top? Now, NASDAQ directly below, as I talked about in my last update, has come down to the trend line here, excluding the shadow, and directly above the trend line, including the shadow here, rising wedge pattern with these other boundaries. It has expanded, and we turned off of this trend line right here from these previous highs right here, as I talked about. Again, if we do rebound back up surrounding the trend line here or the 50-period moving average, again, I'll be watching the gap. Do we move above the gap and move to a new high with NASDAQ? S&P do that? If they don't, we could see S&P move to new high and NASDAQ diverge with that level, but we'll be watching. Bearish scenario would be that breaking down from this pattern. Again, we have the divergences in the weekly time frame. The question is, are they done? We'll go higher. Again, the trend lines in the monthly time frame have not quite been reached yet for the NASDAQ and the S&P. So with this gap lower, it's now the waiting game. This gap is likely going to be filled before the topping process completes. There's a possibility of a top here with NASDAQ if it ends up diverging with the S&P. Should S&P be able to go higher? We'll be watching how this unfolds. The possibility of a divergence or confirmation of a lower high here on the RSI. Again, we've seen the RSI go higher than the previous peaks. This divergence gave us this sell-off here back to the 50. We broke this trend line right here, but there was no confirmation of follow through. I told you there was no evidence that the top was in yet. We could still go higher into the presidential election and the Fed meeting. We've seen the MACD move higher above this level, the RSI move higher, so there's still a possibility of a divergence or a confirmation of a lower high on the NASDAQ. NASDAQ 100 was down 2.40%, down 502 points, almost 503 rounding up. We have this divergence that you about before the sell-off happened. And then on Thursday, I told you again, I talked about gap support here, I talked about the gap fill, and I talked about this gap fill down here, or I'm sorry, the gap support down there, and then the gap fill down here, which again, Thursday my signals warned we are going to get a bigger pullback, possible reversal. Warned you about that on Thursday, warned you about the peak up here with this divergence right here. Just as I warned you right here, we got a higher low just above our 50 period on the daily chart. S&P moved to a lower low. They diverged from one another. They often do that. They did it over here. NASDAQ moved to a higher high. S&P got a lower high. They often diverge at turning points. This was a short-term peak. This was a short-term bottom. This gave us a rally that gave us this divergence that has now given us this pullback. So the signals have done very well, serving us well, warning us about turning points. These are just short-term price fluctuations. I was looking for a larger divergence right here on the side. We still may get it. We've come down to extremes though. I told you that if we lost this 50 area here, we can get a bigger dump. And we've talked about these levels of support. S&P is right at gap support from the presidential election results right there. NASDAQ could come down, fill the gap right here. It's also at the 200 period moving average. And again, the trend line is directly below at this gap fill area here on the NASDAQ. So I'd be watching that trend line. I'd be watching this gap fill. See if we try to bounce surrounding that at some point next week. Do we try to rally with the NVIDIA earnings or not? Come Wednesday's close, do we come back and fill this gap? Do we end up getting a lower high, or can we push above these levels? Again, I still think the S&P could reach my objective target level in the monthly time frame. I do think it's in a topping process. It may fall short of it. I'm looking for clues. But if we get a rally back up and the S&P moves to a new high and NASDAQ does not, that's going to be a huge, huge red flag. We'll be watching to see if this peak holds or not here on the NASDAQ. If I zoom out, NASDAQ, again, is coming down towards this trend line here at the 200 period. The 50 is still above the 200 here, so again, be watching to see if we fill that gap there. Last time we reached the extremes here, we saw that market bottom, then we got a higher low. S&P moved to a lower low, and we saw that divergence between the two. Again, we'll be looking at this area closely, the trend line and the gap fill area, just right at that same area there. And if I bring up the close-up of the 60-minute chart, once again, that gap fill is at 20,227. So that's a level I'll be watching. If we fill the gap, we hit the trend line, we bounce, that could create a short-term bottom. If the 500-point drop with our gap lower, we are currently at 20,394. That was that previous gap I talked about, coming up, filling that gap. We reached it, and we pulled back, and then we went higher right here. So we're going to be watching this gap now. But again, support at 20,227. Trend line, and that is our gap fill area as well, and right around the same level. We saw momentum officially shift on Friday. We dropped below the 10 period on NASDAQ daily chart here. We saw the bar turn to red. You see the little red arrow? It means we closed below the cloud here. So the cloud is now flipped to a red color. It means we're either getting a bigger pullback or the start of a reversal. I warned you Thursday that the awesome oscillator bars had turned to red, and that was telling me that we're going to get a bigger pullback. I warned you back on Monday at the top that we were going to get a pullback. I didn't know if it would be a deep pullback or a more shallow pullback. I knew we were at extremes and we were going to get a pullback, just like down here. We were at the 50 period moving average. We were down at extremes on the 60-minute chart. I told you we were going to get a rally. It's going to be short-lived, like over here, when kind of a sideways consolidation, and over here, or is it going to be something bigger like this? Talked about the gap. Do we get a gap and go like we had here? We had a gap and a go, and here, a gap and a trap. Or do we get a gap and a fill? Right now, we're coming back down trying to fill this gap right here. We're just directly above it. Again, fill it, hit the trend line, and try to bounce. And the 50 period is right at that area, 220,102. The gap fill is at 20,000, I think 227, I believe. We'll be watching. Do the bars go red and go negative, or do we start seeing green bars and start forming? We moved higher than this level. So again, we can form a brand new divergence, just like I talked about on the RSI. The RSI moved higher than the previous levels. So did the MACD. So we can end up forming a brand new divergence or even get a confirmation of a lower high if S&P tries to go higher, but NASDAQ does not. So just looking for clues, but right now momentum is shifting. I told you about that on Thursday because we saw it on the intraday charts, warning of a bigger pullback, and that has now happened. NASDAQ daily chart momentum shifting, dropping below the 10 and closing below the 20 as well. The 20 is the blue line. We approach the gap fill and our rising trend line, the lower boundary of the rising wedge. These divergences in place. You've got it here on the Awesome Oscillator, on the MACD. Stochastic has rolled over. We had that big rally last week. We gave it back. If we start losing the 10, we start losing the 20-week moving average and flipping the weekly charts, bearish reversal of conditions, possible you have a top with these weekly divergences. But again, gapped lower, there's a very good chance we're going to try to go back and fill that gap. Still possible we have new highs on NASDAQ, S&P, but it's also possible that they can diverge from one another. Watching again for red bars. We got one right here, but again, price only went sideways and we bounced off the 10-week moving average. Again, we still have a bullish reversal of conditions from over here after the August pullback. Weekly chart here. Last week, the NASDAQ was up 1,084 points, up 5.41%. We gave some of that back this week, so we had that big move up, and then we gave back quite a bit of it. This week we were down 723 points, down 3.42%. So back a good chunk of that rally, but not all of it. We're still above the 20-period moving average. Again, we were just a fraction under this trend line, which is a parallel boundary from the pandemic low to the 2022 low. We have the divergence. Is it now going to begin to play out? Start flipping to a bearish reversal of conditions in the weekly time frame that I've just showed you. Then again, that's very possible. It is possible that NASDAQ has peaked, as well as S&P. If we start seeing these divergences begin to play out and see evidence of that, still a bit more room to run higher on those monthly charts. So again, we'll be watching, again, very important trend line here in blue right here, and the 20-week moving average. We start losing these levels, that would be extremely bearish. Beautiful channel here. In our monthly chart, we were just a fraction under this level here. Again, maybe that's all she wrote. Still may try to reach it if we go back and fill the gap and try to go a little bit higher here in the monthly time frame. Watching these trend lines closely, but again, this is the long-term channel going back into the 1980s.